What's going on, everybody? Welcome back to yet another video. So in today's video, not only am I going to be showing you how to become a consistently profitable trader, but if you are a small trading account, I'm also going to be showing you how to make $100 a day trading. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. Let's discuss first off how to become a more consistently profitable trader. Now, for me personally, I found more consistency in my trading when I focus on two names only, and those two names are going to be SPY and QQQ. As most of you guys know, but if you don't know, SPY is the S&P 500, the top 500 stocks in the United States, and then QQQ is going to be the NASDAQ, which is primarily made up of tech stocks, so the top 100 tech stocks. But there's also stocks in there like Starbucks. So they're not all tech, but primarily when you think of tech, you think of QQQ. So again, I found more consistency once I started trading those two names than looking at Meta, Apple, Tesla, AMD, Nvidia, so on and so forth. Like sometimes I will see a good setup in an individual name, but I would say like 95% to 99% of my trades are within SPY and QQQ, and then most of those trades being in SPY. I've just found that the technical analysis on SPY is so much easier to do and so much easier to read compared to things like Meta and Tesla, because in reality, stocks like Meta, Tesla, Apple, they move based off of what's happening with SPY and QQQ. So you could have a resistance level on, let's just say, Tesla, but SPY and QQQ look like they want to have more strength. Looking at the technical analysis on Tesla, you might think, okay, we're going to reject this resistance point, but SPY and QQQ continue to push up. Therefore, Tesla is more than likely going to break the resistance. So once I made that switch from trading a lot of individual names to solely trading SPY and QQQ, I found a lot more consistency, a lot less false breakout, and it's been going pretty good. So with SPY and QQQ, I have tons of videos about this in the past, but really what I use primarily is going to be the Fibonacci retracements. That's been my bread and butter for like this last, I don't know, like 6 months. So if you guys do want to learn how to use the Fibonacci retracements, make sure to check out the video I will be leaving down in the description. It's like a 40-minute video or like 30-minute video of me teaching a class live. So definitely make sure you guys check that out. And then while you're at it, also make sure to check out my 450-page book on Amazon titled The New Age of Technical Analysis, where I go over my entire day trading and swing trading strategy, all the indicators you see on this screen right here, plus much, much more. So again, check out The New Age of Technical Analysis on Amazon. Link will also be down in the description. But yeah, so focusing solely on SPY and QQQ, and then I don't trade 0 DTE and I don't trade SPX. I see a lot of people get screwed when they trade SPX, and I also see a lot of people get screwed when they trade 0 DTE. When trading SPY and QQQ, when I started to find that consistency, it was when I was only trading Monday, Wednesday, Friday expiration. So today is Thursday. I traded Friday's expiration, which is tomorrow. Now, come tomorrow, which is going to be Friday, I'll be trading Monday's expiration. Come Monday, I'll be trading Wednesday's expiration. Tuesday, trading Wednesday's expiration. But then on Wednesday and Thursday, I'll be trading Friday's expiration. The reason why I don't really like 0 DTE is because if the stock kind of just sits there and consolidates, like today we ended up taking puts right here. This whole time when it was consolidating, people were more than likely getting stopped out, just because when a stock sits here and consolidates, because it's a 0 DTE expiration, the theta is working against it every minute. So let's just say that it consolidated for 15 minutes and then pushed against your position slightly, you more than likely got stopped out. But since we were trading the Friday expirations, we never got stopped out of this trade. So again, focus on SPY and QQQ and make that switch from 0 DTE to end up trading those Monday, Wednesday, Friday expiration. Now, as far as how to make $100 a day as a small trading account, or maybe even a new trader, again, focus on the SPY and QQQ, and then you want to do your technicals on SPY and QQQ, and you want to look for low risk, high reward entries. So a trade that we ended up taking yesterday, this was absolutely beautiful, was based off of this Fibonacci retracement right here. Again, make sure you guys watch that Fibonacci video. But everybody's strategy is going to be different. You just got to find a strategy that works for you, and then you want to base your trades based off of that. So maybe you really like entering on rejects of the 21 EMA, or maybe even VWAP, whatever it is, or maybe you like bear flags. Just again, figure out your own strategy. But the main thing is going to be finding low risk entries, because we ended up taking this trade yesterday, again, just taking this high to low right here. And as price broke above the 61.8, hit the 21 EMA, rejected, came back down. As soon as it came back down below that 61.8, we ended up entering puts, and we caught pretty much this entire move to the downside before getting stopped out on the rest in profits. So as a small trading account, let's just say that you buy 2 contracts. Let's just say that you buy these contracts for, I don't know, $200 a piece. So in total, you spent $400 on this trade, and your stop loss max is probably like $20 to $30 a contract. So your stop loss would be like 40 to 60 bucks total, while your downside reward is potentially unlimited in this scenario. So if you're willing to risk $20 per contract, you should be looking to at least make $20 to $30 per contract before you start trimming. This is what's very important, and this is what's going to take you a really long way as a trader. You cannot be the person to sell the position too early, because you're never going to maximize your profit potential on the move. So if you're somebody who gets into a trade and you see it's up 11 bucks and you end up taking profits, that made no sense because you were willing to risk 20 bucks. You sold at $11 profit or $10 profit. So the risk reward there, first off, didn't make sense, but over the long term, the one loser is going to wipe out the profits from 2 winners. So in the long run, again, it just doesn't make sense to do. So again, you're looking to at least make a 1 to 1.5 to 1 risk to reward. You're willing to lose $1 to make $1, or you're willing to lose $1 to make 1.5. So as you get this sniper entry, you have to be willing to accept the loss. Again, negative 20 bucks or negative 30, whatever it ends up being. But as it goes in your favor and it starts getting close to that 1 to 1.5 risk to reward, it's up to you if you end up trimming the position. Let's just say, again, you're willing to risk 20 and it ends up dropping and you're now $30 in profit per contract. Again, you have 2 contracts, therefore you're up $60 total. It is up to you what you do from here. You could move your stop loss to, I don't know, maybe negative $10. Now at this point, you're really only risking $20 total, or you move your stop loss to break even. That way the trade is completely free, or you end up trimming one of your contracts. So let's just say that you trim your 1 contract at 30 bucks. Now on the final contract, you want to milk that thing out as much as possible. And this is something that a lot of traders don't feel comfortable with. And my best suggestion is it's kind of just something that you have to force yourself to do. You have to let yourself sit there in that trade. And again, if you're positioned correctly and you get a really good entry, it takes a lot of the emotions out of the trade, especially if your stop loss does end up going to break even or even in profits. So going into the future, what I want you to do is I want you to force yourself to hold at least 1 contract to try to maximize your profit potential. So then as this trade continues to go in your favor, and maybe you don't hit $100, maybe you only hit 80, or maybe you only hit 90, that's still a really good return on your $400 investment. But if you're able to sit there and maximize your profit potential as the trade continues to go in your favor, you just move your stop loss up. So maybe in this scenario, again, you took profits on 1 contract at 30 bucks. Now it's up $50. And in total, you're up, what is that, $80. You have a choice what you can do. You could put your stop loss plus $20 in profit. That way you're guaranteed at least $50 profit on the day. Or maybe you even put it slightly deeper in profits to plus 30. That way you're guaranteed that $60 profit a day. Now let's just say that SPY does end up trading and you made your $100 a day. At that point, you have a choice on what to do. Do you want to take your profits because you hit your profit goal? Or do you now want to move your stop loss up even further to maybe plus $40 or plus $50? Because at that point, if you moved it up to plus 40, you would lock in at least a $70 gain. If you moved it up to 50, you locked in at least an $80 gain. And then from there, you can milk it out and maybe the trade ends up making you $150. Well, if you ended up making $150 today and $50 tomorrow, you still hit your profit goal because each day technically was $100 per day. So as I said, as a trader, it is very important to milk out your profits as much as possible. If you're a small account, in all honesty, the scalping probably isn't going to work the best. I cannot stress it enough, finding those sniper entries with really low risk but high reward. Another trade that I did end up taking earlier in the week, but unfortunately paper handed the crap out of. This could have easily hit your $100 goal. Pivot low, pivot high on the fibs, came down, broke below the level, reclaim, which validated the long. Stop loss was right below this level right here. And as you can see, SPY ended up pushing all the way to a high of 402. So again, if you ended up getting in right here, your stop loss is right down here. Again, let's just say you're risking $30 per contract. SPY ends up pushing to the upside. Now your contracts are up $40, $50 a piece. At that point, you could pop one of your contracts off, put your other contract at break even stop loss. That way you're guaranteed green. And as this thing continues to grind in your favor, all you have to do is move your stop loss up until you're satisfied with your profit. And that's how you're going to make $100 a day. Again, some days you're going to make more than 100, and that's going to make up for the days where you either don't take a trade or you don't end up hitting your profit goal. But yeah, that is going to wrap up this video on how to make $100 a day as a beginner trader or somebody with a small trading account, plus on how to find more consistency in your trading. So as always, if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.